Hello again, everybody. Tom O'Sabin from the University of Illinois Tax School coming to you with our blog for, are you ready for this? April the 18th. Well, not quite time yet to take a deep breath, but I think you might have this one licked. Let's talk about what we need to do today before we can put a bow on the 2021 filing season. So in particular, let's revisit what has to be done today. Well, we know that personal returns are due today, or we need to get those extensions filed. Remember that extensions are in time to file, not in time to pay. If we have clients that want to fund an IRA for 2021, that's also due today. HSA funding, we may have had an opportunity to talk with our clients who have HSAs that they could put additional funds into that HSA and treat it for last year. That also has the personal due date to fund it for the previous year, which again would be April 18th. If anyone answered the question that yes, they did in fact have foreign bank or investment accounts and they need to do FBAR reporting, that FBAR report or extension is also due today, Monday, April the 18th. So let's talk about what else is due today. Well, for the first time in several years, our first quarter estimated tax payments are also due today. And let's not forget about those state payments. They would also have an April 18th due date. Next quarterly estimate date will be on June the 15th. Calendar year C corporations also due today. Trust returns due today. So all of this combined due date comes back to what we were used to prior to the emergence of the pandemic. I want to bring your attention though, if we have S corporations and partnerships, they were due on March 15th. So if they haven't been filed yet, they're late. And so if we didn't get an extension filed by March 15th for those calendar year S corps or partnerships, well, they're late. We need to get those filed as soon as possible because the penalties are quite severe for late filing of these pass-through entity type returns. So let's talk about what's not due today. If in fact we get that extension filed, say for a self-employed person, and they want to make a simplified employee pension contribution for 2021, they actually have until the due date of the tax return plus extension to get that contribution in. So they'll have all the way out to October 15th to make the contribution and deduct it as a 2021 expense. Also, for those employer plans where we're talking about employer match, the employer match is due by the due date of the tax return plus extension. So if we're in the corporate world and we filed an extension back on March 15th, we have until September 15th to make that employer contribution still for 2021. And also other plans, if they're not an incorporated business, would have that October 15th date to make that contribution on the employer side and still treat it as a 2021 contribution. So as we've been mentioning throughout this session, what does an extension accomplish? I think you know this, but I want to mention it anyway, that we're talking about it avoids the failure to file penalties, but any taxes due are not extended, so failure to pay still applies. So if we can't get the returns done, if your client can send some money in, they think they might owe some tax, it's not an issue if they don't owe tax. But if they have tax that's owed, then they need to go ahead and get some money submitted, or they're going to be subject to failure to pay penalties. So no sooner do we get the tax filing season done, then we'll have to get after those extensions, especially situations like I mentioned earlier where maybe an S corp or a partnership is late, or in fact that 1040 client owes tax. That's going to be important to consider. An interesting tidbit that we've run into, and sometimes if you're like me, you go ahead and you get those returns filed as soon as you can, and we get them filed on the due date, which again will be Monday the 18th today. What happens if those returns get rejected? Are we out of luck? Are we late? Well, if you happen to look at IRS publication 4163, I particularly draw your attention to page 48 that says that we have a 10-day transmission perfection period or 5 calendar days to for a rejected extension. It doesn't apply to payments. So the payment would have to have been postmarked by April 18th, but if the return would reject for whatever reason, then we do have 5 days to fix that. So kind of get that 10 days to fix that. Remember again that we're not talking about the payment. So client has a payment due, we've given them the voucher, they've gone ahead and mailed it in, or perhaps we put into our software to debit their bank account on the 18th. That's all fine and dandy. We do have 10 days to fix a return that rejected. The IRS has that original transmission date, so don't think you can do, file one on April the 20th originally and think that it's timely. No, it would have to be a situation where we e-filed a return by the 18th and it was rejected for whatever administrative reason. We're going to have to go in and fix it. So we do have 10 days to fix that, but still get those clients to have those payments postmarked. You may want to take them into their local post office and ask the person at the counter to stamp it so that it shows that it was postmarked April 18th, so we can avoid some of those penalties. One thing I want to throw out to folks in Illinois, and especially in my area, or perhaps anywhere in the country, you may want to check to see if clients in your county were in a federally declared disaster area. Where I live and work, Madison County, Illinois, was in fact a federally declared disaster area because of a tornado that happened in late December of 2021. I'm not sharing that information with my clients so that they have longer to file. However, if, for example, the Illinois Department of Revenue or the IRS would like to propose that returns are late, then in fact we have additional time because we're located in a disaster area. You might want to check that out for your client as well. So at the end of the day, what I want you to do is take a deep breath, sit back, and think about all that you've accomplished. And no sooner do we get done with this year than we got to look towards planning, answering correspondence, and working with our clients for the future. So pat yourself on the back, you've made it. So from all of us here at the University of Illinois Tax School, this is Tom O'Sabin saying we'll say goodbye for just a while and congratulations on your accomplishments.